All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. Right, before we start today's webinar, just take note of the disclaimer, the risk warning. Right, the information is not considered as investment advice or investment recommendation, but instead it's just marketing communication. And so take note that the products are all traded on margin and carry a high level of risk, and it is possible to lose all your capital. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Before we dive into the charts and trading view, let's take a look at what's on the key economic calendar for this week. Right. It was jobs data week in the US, where we had the ADP employment report released on Wednesday, 8th of January. And coming up tomorrow, on Friday, we have the highly anticipated non-farm payrolls as released by the Bureau of Labor Statistics. Right, so this is the calendar for this week. When you can see here tomorrow, Friday, 10th of Jan, at 1:30 p.m. GMT time, the Bureau of Labor Statistics will be releasing its non-farm payrolls report, its employment report, which will highlight the non-farm payrolls number, as well as the unemployment rate. Right, so taking a look at what happened on Wednesday, 8th of January, right, the ADP released its report that showed 122,000 workers being added to private payrolls. This was the least lowest figure in about 4 months, and it was also the second consecutive month of slower job creation, right? You can see here, after rising as high as about 180,000 in October, November and December saw two slower months of job growth, right? So job growth came in at 122,000, which was lower than the forecast of 139,000. And if you look at the 12-month average for the ADP, right, the 12-month average for job growth comes in at about 155,000. So December's readings, not only was it lower than its forecast, it was also lower than the 12-month average. So you can see here, once again, job creation appears to be slowing down, something similar to what we saw from April onwards, right? From April to August, we saw job creation slowed down quite significantly, as reported by the ADP employment report. Now, coming to non-farm payrolls, which is tomorrow, right? We can see that the non-farm payrolls change is shown on the chart on the right, and on the left we have the unemployment rate. Similarly to the ADP employment report, April to August saw job creation slow down as well, as reported by non-farm payrolls. And is this something that we're going to see tomorrow in tomorrow's report, right? After rebounding very strongly in November, gaining 227,000, December's forecast is pointing to a growth of just 164,000, which is lower than the 12-month average of about 190,000. So take note here, we're seeing a similar story for the ADP employment. On the positive side, the unemployment rate, which came in at 4.2% in November, is expected to remain unchanged for the month of December. So quite likely we're going to see the unemployment rate remain at 4.2%. However, all eyes will be focusing on the non-farm payrolls figure itself. Whether do we get a number that's going to beat the forecast, or is it going to be a much weaker number, right? If it's going to be like the ADP employment report where we saw a weak number, on this day, we did see demand for the dollar pull back quite slightly, which caused the dollar index to fall. Now, if we do see another set of weaker than expected employment figures as reported by the Bureau of Labor Statistics, this is very likely going to trigger an intense sell-off for the US dollar, and we're likely to see the dollar index pull back much more sharply. And of course, that could potentially cause gold prices to surge higher, and other currency pairs to be significantly impacted as well. All right, so with that, now let's move on over to the charts and trading view and begin the analysis. And of course, if you have any, we'll start off with the dollar index, of course, and then work our way through some of the major currency pairs. We'll touch on the commodities such as gold and oil and the indices. And of course, should you have any other requests, please do drop them in the please do drop your request in the chat box here, and I'll be more than happy to go through the analysis with you. All right, so starting with the dollar index, we can see here, right? As of last Thursday, exactly 1 week ago, the dollar index hit a high of 109.53, and since then it has pulled back quite sharply before stabilizing around Tuesday this week at around 108.30. Since then, it has risen quite strongly, rebounded quite strongly once again. Now, of course, if we do see a strong set of non-farm payroll figures, that's quite likely going to cause demand for the dollar to increase very, very significantly, pushing dollar index even higher, right? So for now, you can see the dollar index is trading pretty close to its first resistance, which is at 109.25, right? This is a swing high resistance that was formed last Thursday, 2nd of January. And we have seen not once, but two attempts this week for dollar index to break above this resistance level. So far, it has not done so. But perhaps if we do see a strong set of non-farm payrolls numbers, then we could see this bullish breakout take place. Now, if this first resistance gives way, where could the second resistance for the dollar index sit at? For that, we're going to have to zoom out a little bit and look at the chart here in November of 2022. You can see here the dollar index is trading at a level that was last seen in November of 2022, right? Nearly just over 2 years ago. Right. So looking at this level here, right? This is where the dollar index is currently trading at 109.25, just around here. Yeah. Was it? Yeah, just around that. Yeah, 109.16 is trading around here. So looking at the next major resistance, beyond the first resistance, I would probably, I see a pretty decent, almost like pullback resistance or overlap resistance at around, oh wait, hang on, that's a little bit too far. I would say, wait, this is actually a nice pullback resistance level here at 109.61, right? You can see here, right, back in October of 2022 and November 2022, the dollar index making a swing low bounce here in October, and then a second bounce here, a smaller bounce on November. So this level here previously functioned as strong support, and after giving way, this level can now potentially function as resistance. So this is how we're identifying the second resistance for the dollar index. Right, so this is the second resistance. And now let's come back to where this index is currently trading, right? So this is how we've identified the second resistance, which is at 109.70, and the first resistance is at 109.25. Now, in terms of support, right, you can see here the dollar index has bounced off this level very nicely, right, just above a swing high resistance that had taken place on 22nd of November, right? This is like the first major support, right, for the dollar index here at 107.49. And I would identify this level here as an intermediate support, like almost like a swing low support that had taken place here at the beginning of the week, right? I'll then identify this as an intermediate support. Now, with this strong uptrend here, right, we are able to draw a couple of Fibonacci retracements. The first starting from this swing low on 6th of December, going up to the high on the 2nd of Jan. We can see that the 50% retracement, and maybe it's also a 38%, let me see, right? 38 and 50% retracement sitting pretty close to the intermediate support and the first support. So let's keep these two retracement levels on and highlight them as a zone. No, and I also like to remind everyone that US markets are going to be closed today, right, in honor of remembrance for late President Jimmy Carter, right? They're having day of mourning for former President Jimmy Carter, who passed away at the end of last year. So all US financial markets are going to be closed, right, from stock exchanges to the bond markets, I believe. So we can definitely expect significantly lower trading activity and trading volume later on today. So take note, once the European session comes to an end, trading volume and activity is likely to taper off quite significantly. So it could be a very quiet, quiet session starting in a few hours. But US markets will resume trading tomorrow. And of course, with the non-farm payrolls coming up, it's definitely going to be a blockbuster event. Right, so coming back to the dollar index here, right, we've run a Fibonacci retracement on this uptrend. Oops. From this swing low here, 6th of December to the high. This 38 doesn't look very good anymore. Let me see if it's a 23 and 50. No, in this case, let's just keep 50. Let's not overcomplicate the analysis. Right, and then on this bigger uptrend that begins from this swing low here on 27th of September, we can run another Fibonacci retracement starting from this swing low here, 27th of September, going up to the high on the 2nd of Jan. We can see the 23.6% retracement aligned pretty well with the first support. You can see a very strong support zone for the dollar index at around 107.50. Now let's zoom on down to the 4-hour time frame and see if we can fine tune the analysis by looking at first resistance. It's simply going to be this multi-swing high resistance at 109.39. This intermediate support here looks like a double bottom, right? On the multi-swing low at 107.92, and the first major support is over here at 107.56, right? When we go down a time frame, right, is sometimes it may be necessary to fine-tune the levels a little bit, and that's perfectly fine. Right, so we can see here dollar index is pulling back once again today, and of course with US financial markets being closed, there might not be any major significant movements overnight, and we are likely to see uh, trading activity pick up much more significantly tomorrow. Right. So if we do see the dollar index pull back towards 108.50 and maybe dip under 108, right? Take note, this is like right now, there's no real bias for the dollar index, right? If you look at it here, right, since 31st of December, right, it's just approximately trading within this channel, right? Is running the resistance several times at 109.40 and has found support at around 107.90, right? So it is moving within this range, within this channel here, not like this nice bullish uptrend that we saw from 6th of December all the way till 2nd of Jan, right? So it's sort of trading sideways in this channel here for now, right? So perhaps there may not be much. The only opportunity here currently that I see is like if was a potential bearish reversal, right? There's an opportunity to play a bearish reversal of the first resistance here, right? With the dollar index failing not once but twice, right? This is actually the third time that the dollar index has failed at the first resistance and looks to be dropping lower, right? There's a potential opportunity for a bearish reversal for the dollar index. Now, over here, where can we identify potential take profit targets, right? I see a nice, there's a pretty decent tiny support level here at 108.92, right? We can see the dollar index bouncing off this level on Wednesday. This is where we can identify the first take profit target for any short trades at 108.92. And of course, if we see this index fall even lower, the next take profit target can be identified at this pullback support at 108.48, right? So this is where the next potential take profit target can be identified. Now, on this uptrend here, we can also run a Fibonacci retracement starting from this swing low, 7th of Jan, going up to the highest point, which is here on 8th of Jan, right? When we look at all the fibs, we can see that the pullback support at 108.48 is also accompanied by a Fibonacci retracement at 61.8%. And we can see here that this little pullback support level here that occurred on Wednesday, which was yesterday, is also accompanied by Fibonacci retracement at 33.6%. So let's just keep 33 and 60% in our analysis. Right. Now let's zoom in a little bit here. So we can see dollar index has failed for the third time at the first resistance and looks to be pulling back. So this gives us a potential opportunity of potential bearish reversal. Like, of course, now with the current 4-hour candle already reversing of this level, it might be a little bit too late, but nevertheless, let's assume we've already put on a position here, right? Or you're looking to enter the position at market, right? And should we see the dollar index pull back even further, we'll be looking to identify the first take profit target at this support zone that's identified between the 23.6% Fibonacci retracement and this little swing low here that has taken place at 108.90. This is where I would identify the first take profit target for any short dollar index trades. And of course, if it continues to slide lower, the second take profit target is going to be identified where the 61.8% Fibonacci retracement sits at. All right. So these are the key levels here for the dollar index on the daily time frame, right? On the daily time frame, we set the key support and resistance levels. And on the 4-hour time frame, when we zoom in a little bit, we can see that the dollar index has reversed off the first resistance for the third time, and it could potentially drop lower, right? And especially if this first support zone at 109 gives way, right? Then we can expect this index to slide even lower. Now, moving over to the euro. Okay, let's start on the daily time frame once again. if of course the dollar index has risen sharply since the end of September, of course the euro is going to be doing the opposite. Is moving in the opposite direction. We can see very clearly a series of lower highs and lower lows. It's almost like we can probably identify a nice bearish channel as well, right? Probably identify. Okay, it's not the best bearish channel, but yeah, you can see very clearly it's trading within this bearish channel and looks to be dropping lower today as well, but as it is now retracing higher. Now, when the euro makes a swing low like this here, that had occurred last Thursday. This is a nice swing low support. Right, this is a nice swing low here. This is where we can identify the first support for the euro. And when we zoom on a little bit, let me see if there's anything that we can identify. Yep, it seems to be at a level where it seems to have found support at a level that was previously uh seen in November of 2022, right? So almost 2 years ago, this was where the euro previously found support as well. And it looks to be exactly where, yep, it looks to be exactly where the euro found support last Thursday, 2nd of Jan. So it's important to have a higher time frame, right? To begin the analysis on the higher time frame, so we are able to identify significant support and resistance areas, right? If you had not started the analysis on the daily time frame and zoomed out, right, we wouldn't have identified this support area here. So this is very critical as well, because in our analysis, let's just rewind and assume that we were somewhere here, right? Let's just assume that we were in the third week of December and we had shorted the euro after stalling here, right? You can see the euro rising as high as 1.0435 and it started reversing, right? And then at this point, if you had open a short position, we would be looking to identify a suitable take profit target. And then by begin doing the analysis on the daily time frame and zooming out and trying to identify previous support areas, we would have found this level here. This is a nice swing low that has taken place in November of 2022. This level sits at 1.0239. So we would have identified our take profit target for the short euro position at close to the first support. So now when we play this out, we can see that the euro traded sideways for a couple of days before hitting this level very nicely and staging a very strong rebound, right? So you can see here why it is important to identify prior significant support and resistance areas, because they can really be at a level where price sees a major reaction, right? We can see very clearly price reacting on this level very clearly, very significant price action taking place here, and the euro rebounded quite strongly, right? Almost coming back to where the entry was in the third week of December. So this is how we've identified the first support, right? Second support can be identified by a second resistance, first resistance, sorry, can be identified by this level here at 1.0440. We can see that since 20th of December, the euro has failed to break above this level. And so this is very clearly where the first resistance sits. And the second resistance is like this multi-swing high resistance here. It's almost like an overlap level, right? When I stretch it all the way back here till 16th of April, right? 16th of April, we see a nice swing low being formed here. And then after that, this level proceeded to function as resistance not once, twice, but 3 times here, right? So this creates a very nice overlap level at 1.060, which we can identify as the second resistance. Now, what this also tells us is with the euro trading within the bearish channel here, right? When it comes up, should the euro rise up towards the first resistance, right? We have a potential short opportunity, right? If the euro retraces higher and it stalls at the intersection of the upper trend line of the bearish channel and the first resistance, right? This helps us identify an area, but I would say wait for the euro to stall around this level and start to reverse a little bit lower before opening a short position, right? We want to see it actually be constrained within this zone before putting on a trade. And should that bearish reversal materialize, we can then target the first support at 1.0239 as a potential take profit zone here. Now, on this downtrend, we can also run a Fibonacci retracement, starting from this swing high, 25th of September, going down to the swing low here on the 2nd of Jan. We can see that a 23.6% retracement sits just above the first resistance, and we can see the 38.2% retracement aligning very well with the second resistance, right? So the Fibonacci retracements add further significance to the strength of this resistance zones. Now, what about second support, right? If you had identified the first support here at this swing low that had taken place in November of 2022, I see another pretty strong support level at an overlap at 1.0115. We can see here back on September of 2022, this level functioned as resistance. And then on in July of 2022, this level functioned as support. So we can see a very nice overlap, which we can identify as the second support here. Right, so with the euro trading in a prolonged downtrend, right, any retracement to the upside can be identified as a potential entry for a short reversal, right, for a bearish reversal. And that intersection is identified by three factors, right? We have three factors identifying a potential resistance zone. We have the 23.6% Fibonacci retracement. We have the first resistance, which is this pullback level here at 1.0429. And we also have the upper trend line of the bearish channel, right? So the intersection of these three factors help us identify a potential level or area where we can expect the euro to stall, and should it fail around this level here and begin to reverse the drop lower, it helps us identify a potential bearish reversal opportunity, a short opportunity, and with the take profit target identified close to the first support at around 1.0240, 1.0250. Now looking at the euro on the 4-hour time frame, right? Let's see, there's a need to fine tune the analysis, right? I think we can. Right, this level now looks like actually like a very nice overlap level, right? The first resistance on the 4-hour time frame looks like a nice overlap level. So you can see here very clearly, this is the 23.6% Fibonacci retracement. We have the overlap resistance, and we have the upper trend line of the bearish channel, helping us identify a strong resistance barrier here. So if we do see the euro rise up towards this zone once more, right, it helps us identify a potential bearish reversal opportunity. And then if that bearish reversal does materialize, we can target this green zone here as a potential take profit zone. All right, so these are the key levels here for the euro on the daily and 4-hour time frame. Let's move on over to dollar yen, and then after that we'll cover the commodities. And of course, if there's any other instruments that you would like to be seen, right, do not hesitate to drop your request in the chat box, right, and I'll be more than happy to go through the analysis with you, right? Don't wait till the end to drop your requests, drop them in early so we can so we have sufficient time to go through it together. Now looking at dollar yen, we can see the Japanese yen has been very weak, right, throughout 2024, has been very weak throughout 2024. Right, we can see the first half with the yen weakening significantly, causing dollar yen to rise up as high as 161.70. And then after that, we had the yen carry trade unwind that took place in the third quarter of 2024, and we saw the yen strengthen significantly, which causes dollar yen to reverse and drop sharply before stabilizing at around 140.50. And we see a nice, and of course, we see a nice swing high taking place here. We see a nice swing low taking place here, but we see a very significant swing low taking place here. There's a strong support level, very similar to this very strong swing low that took place here at the beginning of December, right? So it's important to look out for these type of swings on the daily time frame or the H4 time frames, because they really help us identify significant support and resistance levels. Even this level here, right, is actually this resistance here actually helped us identify this support area that materialized on 6th of December. Now, if we look at it, right, if we actually look at it here, this level was previously a resistance, right? Let's just label it as the first resistance for now. And then as the dollar yen recovers and stages a very strong rebound, right, it breaks through the first resistance. And when this happens here, this previous resistance level can now potentially function as a support area for the future. So let's see what happens finally. right? We can see that after this bullish breakout takes place in mid-October, the dollar yen stalls at around 156 in mid-November and reverses to drop very sharply, and it managed to find support at 149.37. So after making this bullish breakout here in mid-October, this level now will proceed to function as a support area, which it did very cleanly, right? Very nicely. Where we see a very nice swing low taking place here. Now similarly, there's a nice swing high resistance that had taken place here, right? Pretty close to where this support had taken place previously in mid-July. So mid-July, 156.20 functioned as a nice support area, and it is where the dollar yen ran into resistance in mid-November. So you can see once again how prior significant support areas or resistance areas can help us determine a major blocking point in the future. So similarly, this was previously a support level, and then after it makes this bearish breakout, this support level is going to be used as a potential resistance barrier, which is what exactly happened in mid-November. And then once the bullish breakout took place, this prior resistance level can now function as support, which is what has happened here in December and January. Right? We see dollar yen bouncing off this level a couple of times, and this is why we would identify 156.16 as the first support for the dollar yen. And of course, higher up, right, I see the dollar yen running the resistance at another prior swing high here. And this is where it ran into resistance this week. So you can see very clearly, right, how significant resistances and support levels from the past can have a pretty strong impact on price action uh, in the present time. So this is how we've identified the first resistance, and dollar yen looks to be reversing off this level once more. So we have a potential bearish reversal opportunity for the dollar yen here. And if this bearish reversal does gain further traction, right, we're going to be targeting close to the first support as a potential take profit target. So that means we're going to be looking at maybe at around 156.30 to 156.25 as a potential take profit zone for any further pullbacks in the dollar yen. Now, beyond the first resistance, we see this very significant swing high taking place here in July of 2024. So this is where I would identify the second resistance. And for the second support, let's see how we can identify that. But before we get into that, I'm going to run a couple of Fibonacci retracements as well. First of all, I'm going to run a retracement from this swing high on 15th of November, going down to the swing low here on 3rd of December. When we look on this retracement, we're going to be looking for key extension levels, and they sit at 127 and 161%. And we can see that the 127% sits just above the first resistance, right? So this is going to be a pretty strong resistance barrier here. And we can see the extension at 161% aligning very well with this swing high resistance, which is the second resistance here. Now, on this uptrend that begins from 3rd of December, we can also run a Fibonacci retracement. Swing low from 3rd of December going up to the high of yesterday. When we look at all the fibs, we can see that 23.6% retracement aligned very well with the first support. And then when I look at this level here, I look at this level here at around 153.60, I see a pretty decent overlap, right? It's not the cleanest overlap level, but once I tidy things up, you'll probably be able to see why this is the case. And this overlap level is also accompanied by Fibonacci retracement at 50%. So we're going to keep 23 and 50% retracements in the analysis here. Now let's just zoom in a little bit so it's a bit more clearer. And you can see 23.6% retracement aligning very well with the first support. And we can see 50% retracement aligning pretty close to the second support. Now, why is this an overlap level? Right, we can see dollar yen running into resistance here at the end of October. Then we see a nice bounce materialize here on 19th of November. Then once this bullish breakout occurred on Friday the 13th, we see a nice support taking place on December 17th before dollar yen bounced very strongly. So we can see here that this level at 153.40 is indeed a pretty significant overlap that's accompanied by a 50% Fibonacci retracement. So this is where I would identify the second support. Okay, and let's see, there's anything else to highlight? Probably not. Let's see. Actually, on this nice zigzag pattern here, we can also run a Fibonacci projections. A projection involves 3 points, starting from point 1 here, 16th of September, going up to point 2, 15th of November, and ending at point 3, which is 3rd of December. We're going to look at all the projection levels. So key projection levels sit at 61.8%, 78.6%, and 100%. Now, once again, we can see the 61.8% projection sit pretty close to the extension at 127%. And we can see the projection at 78.6% sit very close to the extension at 161%. So when you have Fibonacci levels lined up like this, right, we call this a Fibonacci confluence. It simply means you have more than one Fibonacci level at a particular price zone. And usually that means that this resistance areas are going to be pretty strong, right? Typically, it would imply that these resistance areas are going to be pretty strong, which is what we've seen since Tuesday, 7th of January. So you can see here, dollar yen has failed 3 times at this level, beginning on Tuesday, 7th of Jan. Then again on yesterday, Wednesday, 8th of Jan, and today as well. Today's reversal looks a little bit more stronger, right? And if this bearish reversal does materialize or drops further, we can identify a potential take profit target close to the first support at 156.16. Now looking at the 4-hour time frame, right, we can see here, right, dollar yen has run into resistance several times and especially today, this pullback looks to be a little bit stronger than the other days. Right, so take note here, if this bearish reversal does materialize, right, we can target close to 156.30 as a potential take profit zone for any short trades for the dollar yen. All right, now with that, let's move on over to the commodities, starting with gold. And after a very strong bullish run throughout 2024, right? After a very strong bullish run from 2024 with gold prices rising from about $2,000 per ounce all the way till $2,800 per ounce, a very strong move, right? If you look at it from the bottom of October 2023 till the intraday all-time high that was formed on 31st of October. Right, you can see gold prices have surged more than 54%, right? Over this period here, very strong bullish move for gold prices. But since then, since this all-time high on 31st of October, gold prices have sort of consolidated within this channel here, right? We can once again identify a sideways channel here for gold, right? Finding support at around $2,560 per ounce on the lower bound and running to resistance at $2,720 on the upper bound here. So when we are able to identify a sideways channel like this, it also helps us identify the first resistance and the first support, right? So first resistance is very clearly going to be this multi-swing high resistance at $2,715 per ounce. And the first support is going to be this swing low here. This is a very significant swing low that has taken place in mid-November. And it's at $2,562 per ounce. Of course, beyond the first resistance, where the intraday all-time high took place, is where the second resistance for gold price sits at. That's at $2,787 per ounce. Now, for the second support for gold, I see a pretty decent overlap level, and that sits at $2,483. And that's how we've identified the second support, right? We can see gold running the resistance on 17th of July, 2nd of August, and then 13th of August, after which this level proceeded to function as support on 22nd of August, 3rd of September, and then 10th of September. This creates a nice overlap level, which we can identify as a second support. Now, with gold rising up, right, if you've been long gold since the beginning of this week, perhaps, right, and once we've identified the first resistance at $2,750, right, we can identify a potential take profit target close to this resistance here. So anywhere at around $2,700 per ounce would be a suitable area to identify a take profit target for any long trades for gold. And if we do see gold stall at the first resistance for the third time, right? If it does stall around this first resistance for the third time, it also helps us identify a potential bearish reversal opportunity for this precious metal here, right? So once again, if you've been long on gold, right, you can target your first, you can target a suitable take profit area close to the first resistance. And of course, if by next week, if we do see gold stall at the first resistance for the third time, it also helps us identify a potential bearish reversal opportunity. Now, look, let's move on over to the 4-hour time frame to fine tune the analysis. Right, you can see here. Let's just fine tune it a little bit. The first resistance is here. Now we also have a nice downtrend that we can where we can run a Fibonacci retracement starting from this swing high, 11th of December, going down to the swing low here on the 18th of December. Let's look at the 61 and 78.6% Fibonacci projections. Right, this is also going to be important as well, right? Because I see an intermediate resistance, almost like another overlap here at 2,676. Right, we can see gold running to resistance here on 9th of December. After that, it bounced on this level a couple of times on 11th of December, and then the second time on the 12th of December. So this looks like to be a pretty significant zone as well. So if we do see gold prices break above the 61.8% Fibonacci retracement, then we can probably expect this precious metal to at least make a run towards the first resistance here. So take note, this is like a sort of like a confirmation for further upside action for gold, right? So if you're long on gold and if it manages to break above the 61.8% Fibonacci projection here, this resistance zone, that gives us further a little bit more confidence that we can expect gold prices to continue rising up, perhaps getting close to the first resistance once more. And in terms of support, right, I also see an intermediate support level and another overlap, right? I see a pretty decent overlap at around, yeah, actually just around here, right? This is at $2,631 per ounce, right? So this is another overlap level that we should be aware of. So let's just say now gold prices have uh, hit the first resistance for the third time, makes a bearish reversal, is dropping lower, right? This is where I would identify the first take profit target for any short gold positions that I have. And then the second take profit target can be identified at this swing low that has taken place here on 18th of December, right? So we can see how prior swing lows, right, such as, prior swing lows or significant swing lows such as these can be used in the identification of take profit targets for short trades. And at the same time, we can see how swing high resistance, such as these levels here, can be used as a potential take profit zone for any long trades that we may have. Right, and even this 61.8% Fibonacci retracement, right, and this overlap level can be used as a potential take profit target for any long trades that we have, right? We can see here gold making a nice swing low of $2,630 per ounce at the beginning of the week, is climbing quite steadily towards the 61.8% Fibonacci retracement. This is where we can identify the first take profit target for any long gold trades. And of course, if it continues to climb even higher, we're going to be identifying the second take profit target close to the second resistance here. Oh, sorry, close to the first resistance, which is the multi-swing high. Right? So these are the key levels for spot gold. Now let's move on over to WTI oil. Once again, starting on the daily time frame. Right, so we can see here throughout 2024, it was gold prices fluctuated quite wildly, right? In the first 6-7 months, right? You can see, or at least in the first 4 months, 3.5 months, you can see crude oil, sorry, making a very strong bullish run, right? Gold prices up, crude oil prices rose as much as 21% in the first 3.5 months, right? A very strong bullish move. After that, it practically reversed and gave up all the initial gains, right? We can see here from peak to trough, this commodity then lost more than 16.5%, right? Giving up nearly all the gains, then reversing very strongly from this trough here on 4th of June, going up to as high as going up to this high on 5th of July, gaining another 16.5%. Right? You can see that the fluctuations in crude oil prices were very significant. And even this bearish reversal here from 5th of July till 5th of August was a very large move, dropping almost 15%, right? And so on and so forth. So you can see crude oil prices fluctuated wildly in the first 3 quarters of 2024. And then after that, as we approach the final quarter of 2024, we actually saw price sort of consolidate within this box once more, right? You can see here since the third week of October, crude prices were restricted at around $73 per barrel on the upper bound, and was supported at around $67 per barrel on the lower bound here. But as of last Friday, we saw bullish breakout take place. So it also helps us identify, it's important to identify a channel such as this, because when the bullish breakout takes place, right, it also gives us, it also helps us determine whether this breakout is sustainable, right? Because this prior resistance barrier can now be a potential support area, right? So you can see here that previously this was a very significant overlap resistance, right? Up till 2nd of Jan, this level at $72, and this is at 62 cents, $72.62 was a very significant overlap level, which finally got taken out on Friday, 3rd of Jan. Now, when this bullish breakout takes place, this is when a major resistance can now potentially be a support. So that's how we've identified the first support for crude oil. And the first resistance is going to be this level here, right? There's a nice resistance taking place here on 10th of October at around $76 per barrel. So this is how we've identified the first resistance. And of course, the second resistance is this multi-swing high here at $77.98, right? First swing high taking place on 26 August, second swing high taking place on 8th of October. And first support, right, we can see a nice swing high taking place here on 16th of December. So a prior swing high can now potentially function as a pullback support level. So that's how we've identified second support. Now, after crude oil prices dropped reverse sharply on Wednesday, 8th of Jan, it seems to be consolidating around this level today, right? At the first support. So let's look at it on the 4-hour time frame, right? Let's zoom in down or zoom on down to the 4-hour time frame. And we can see that for now, crude oil prices seems to be stabilizing around this level here. And we can also run a couple of Fibonacci retracements, right? First retracement we can start is from here, 20th of December, going up to the high on the 8th of Jan. When we look at all the fibs, we can see that the 38.2% retracement sits pretty close to the first support, and the 61.8% retracement sits pretty close to this pullback level here as well. So we're going to keep 38 and 61. And what this also tells us here, the support zone is if crude prices can stay above the 38.2% retracement, it gives us a little bit more conviction that we may have a potential bounce for crude oil. Right, remember when we look at it on a daily time frame, right? Price made a bullish breakout above a prior resistance, and now looks to be finding support at $72.60. So take note, prior resistances can be a support area, and this support area is also accompanied by Fibonacci retracement at 38.2%. So should this zone manage to keep prices supported, we have a potential bullish bounce opportunity for WTI oil, right? And if this bullish bounce does materialize, we can identify a take profit target. The first take profit target at this multi-swing high resistance at $74.32, right? We can see crude oil prices stalling not once but twice at this level. The first happened at the beginning of the week, Monday, 6th of January, and the second one happened as recently as yesterday, Wednesday, 8th of Jan. So as of now, prices seem to be consolidating around the first support and the 38.2% Fibonacci retracement. If crude prices manages to stay above $72.20, right, we may have a potential bullish bounce for this commodity. And then if that bounce does materialize, we can target this multi-swing high resistance at $74.32 as a potential take profit target. Right, so these are the key levels here for WTI oil on the 4-hour and daily time frame, and prices are consolidating around a significant support area as of today. All right, now let's move on over to the indices, and we'll look at Germany 40 on Germany 40, Germany 40, which is the instrument that tracks the DAX futures. All right, before we continue, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with the analysis on the DAX and US 500. Right, and of course, if there's any other requests, right, please do drop them in the chat box so we have time to go through the analysis together, right? Don't leave it till the end. Right, I'll keep the poll running for another 30 seconds or so. Right, great to see the feedback coming in. All right, thank you so much. Right, I think yeah, just keep it running for a little bit longer, and I think that's most of you who have responded. All right, great. All right, yep, there's most of you who have responded. All right, thank you so much. All right, now let's just continue. Right, so coming back to the DAX, right, we can see the DAX has made an intraday all-time high here on 13th of December, right? Quite ironically, exactly on 13th of December, Friday the 13th, at 20,530. And since then, it has failed to recapture this level. So we can see very clearly the first resistance for the DAX is going to sit at around 20,430. This is the first resistance, and it is a level where the DAX stalled once again on Wednesday, 8th of January, which was yesterday. Now, when price is trading close to an intraday all-time high, right, we have no other level that we can reference to identify the second resistance. So in such a scenario, we have to rely on tools such as Fibonacci extensions and projections. So let's start with an extension first. To find extension levels, we run a retracement from this swing high on 13th of December, going down to the 20th of December. Remember, key extension levels sit at 137 and 161%. Now, next, we're going to use our Fibonacci projection, and that involves 3 points. We're going to start the projection from here, point 1, 5th of August, going up to point 2, 17th of October, and ending at point 3, which is 19th of November. Now, we can see the 61.8% projection, right, aligned well with where the aligned pretty close to where the intraday all-time high has occurred, right? So that means as price was rising up here in early December, we would have used this projection to help us identify a potential resistance barrier for the DAX, which is what it has pretty much happened exactly. And we see it's since Friday the 13th, price is pulling back quite sharply. Now, we can also see the 78.6% projection sitting quite close to the extension at 127%. So we can use this zone to help us identify the next potential resistance barrier. So in this case here, this is an example of how we've used the Fibonacci extension and a Fibonacci projection to help us identify the second resistance here, which is at around 20,900. Okay, now in terms of support, right, we see the DAX making a very nice swing low support here in early Jan, right? We see a very nice bottom being formed here. So very clearly the first support for the DAX is going to be sitting here at around 19,791. Right, and in terms of the second support, it's probably going to be this overlap level here, right? There's a nice overlap level at around 18,972. Right, maybe there's something in between that we can identify on the 4-hour time frame, but for now, let's just keep it as such. And let's just move in over to the 4-hour time frame. So, right, what this prior resistance also tells us is, right, as price is rising up, was rising up on Wednesday, right, it helped us identify a potential bearish reversal opportunity, right, because this is a pretty strong resistance barrier. And once the DAX hit the first resistance and started reversing, it helped us identify a potential short short reversal opportunity here. Now let's move on down to the 4-hour time frame. and see if you can fine tune the analysis. First support is down here, right, on the 4-hour time frame. Second support is fine, I think. Now in between here, right, we can also run a nice Fibonacci retracement. And before that, I'm just going to adjust the first resistance, right? Okay. Remember, when we move down a time frame from daily to 4-hour time frame, it's perfectly fine to fine tune the analysis on the levels a little bit, right? As long as they're not drastically being moved all over the place. Now, on this little uptrend here, right, we can also run a Fibonacci retracement from this swing low on 20th of December going up to the high on the 8th of Jan. When we look at all the fibs, right, I can also identify a pretty decent pullback, like another overlap level at around here, right, at around 20,191. This level here, which is close to the 38.2% retracement, can be identified as the first take profit target. What is bearish reversal? Now imagine if you had played the bearish reversal of the first resistance, and as prices are dropping lower, right, I see a nice support zone identified by this overlap at 20,191 and the 38.2% Fibonacci retracement. This is a zone where I'll be using to identify my first take profit target for any short trades, and then I'll be using this pullback level here, another pullback support level at 19,979, along with the 61.8% Fibonacci retracement to help me identify a second take profit target should we see the DEX fall even lower. So for this uptrend, we're going to keep 38 and 61%. Right. Okay, so these are the key levels here for the DEX on the 4-hour time frame. Right, it looks to have made this bearish reversal and is sliding lower. First take profit target can be identified at around the 38.2% Fibonacci retracement. And of course, if this index continues to slide even lower, we can then target the 61.8% Fibonacci retracement as the next take profit target. Now let's wrap things up with the US 500. Remember, US markets are going to be closed today, right? And they will reopen tomorrow. Futures would still be trading, right? But the stock exchanges are going to be closed. And I think bond markets may be closed as well. I'm not too sure about that. I can't remember exactly. But yeah, stock exchanges are definitely going to be closed. But the futures are going to be open. Futures markets will be open. Now, for the DAX, S&P 500 as well, it has made an intraday all-time high on 6th of December. This is where the first resistance sits, right? I also see a nice overlap support at 5,866. This is where I would identify the first support. And at the same time, right, we can also see a pretty decent descending trend line here. And we have a pretty decent descending trend line that has been respected since the all-time high, right? We can see this strong retracement to the upside after Christmas for US 500 stalling at around 6,040, dropping lower, finding support at 5,870, retracing higher once more. But this bounce stalled at the descending trend line again, right? So you can see here, this descending trend line is pretty significant as well, it's pretty important. And any clean break above this descending trend line is going to be considered pretty bullish for the US 500. As of now, it's being constrained within this sort of wedge, right? This is a nice, if you look at it, this is a nice descending triangle, right? This is a nice descending triangle pattern that's being formed here, and price is being sandwiched within this zone. However, a strong bullish breakout above the descending trend line is definitely going to attract a lot more buyers for US 500 here. Now, in terms of second support is also almost like an overlap at 5,670, another decent overlap level here. And since US 500 has bounced off 5,867 several times, this first support is very important, right? We have a potential bullish bounce here. And of course, if US 500 can break above the descending trend line, then definitely we can expect a much stronger move to the upside. But for now, prices are sort of being sandwiched between this zone here. Now let's move on down to the 4-hour time frame. See if there's a need to fine tune the analysis. think it's okay. It's pretty much fine, right? Nothing much, nothing else is uh analyze, I guess, and then just take note. It's going to be a pretty quiet session once the European markets come to a close. So, there might not be that much of trading activity going on later on today. And we're definitely going to see things pick up tomorrow on Friday, 10th of January, and especially when the non-farm payrolls hit the news wires, that's definitely going to inject extreme volatility into financial markets. So do watch out for that. It's going to create huge moves in the currency markets, commodities, and even the uh, indices as well. All right, so that's all I've got for you guys today. Thanks everyone for tuning in to today's live trading session brought to you by IronFX. I wish you all the best in your trading journey and looking forward to seeing all of you at the next session. All right, and as we come towards the end of the trading week as well, do remember to take some time off to spend some quality time with your friends and family, right, and to recharge and come back with a fresh mind on next Monday for a brand new trading week. All right, thanks everyone. Take care. Have a great session and look to see you at the next webinar. Right, take care and catch you all soon.